Hello traders, how is it going? I hope you're all doing well. Welcome back to this YouTube channel. In this video, I just want to share with you a powerful approach you can adopt when trading regardless of your trading style. Every morning before I trade, I need to be able to answer these three questions. So the first question is my what, right? So what am I going to trade for the day? Am I going to trade Euro USD, GBP USD? Which pair am I going to look at for the day? And that decision for me is based on the market structure or the market condition for the day, right? So personally, I'm only looking for trending market. I only want to see the market making higher highs and higher lows. This is an uptrend or a downtrend, lower lows and lower highs. I'm only trading the trending market. If the market condition for that pair is sideways, I'm not going to look for trades on that pair, right? So I'm only looking for trending market, that is an uptrend or a downtrend. My second question has to do with when am I going to be trading, right? So am I just waking up any random time, getting on the market and trading, or I have a specific time that I wake up to trade? Yes, I do have a specific time, and that has to do with my trading session. I have various trading sessions. I personally trade the London session, so that is my when. And my why has to do with my entry reason, right? So if I identify the market condition, this is an uptrend, I identify my session, what is the reason or what is going to make me execute, right? So I need a reason to enter into the market. If I need to buy, there should be a reason for me to be clicking the buy, or if I need to sell, there should be a reason for me to be clicking the sell, right? So that has to do with my entry reason, and that is my why. So let's just say I've done my analysis, I've looked through all the pairs. I'm going with Euro USD for the sake of this video, okay? Yeah, but before I go on, I just want to break down, a trade that we took using this particular strategy, So first of all, I'm just going to go back, cut this right here, and then we're just going to take it back. All right, so going forward, we were actually on an uptrend. We had this high, 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 low, high, 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 low, high, high. This was our low. Price broke this high, created a new high, and then price came down to take out this low, right? So we had a change of character, which means the high, 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 low, high, high structure actually shifted. We are now on a downtrend, right? So we're no longer looking for buying opportunities because the trend is now bearish, right? So on the daily time frame, we had this trend going down, and then what I observed was we had the market actually creating this kind of structure, right? Heading towards this support level, we had the price reducing, the pressure from the sellers, right? Because if you look at this move, this was a very big impulsive move, but heading towards this support, price started correcting, moving very correctively, and this is indicating that sellers momentum is reducing, right? So looking at this structure, of course, I anticipated that this is just going to be a reversal pattern. This could also be a falling wedge pattern, right? So what I was expecting was for price to reverse at this level and then push to the upside, right? So let me just delete all these things, and then let's just focus on the market structure. So on the daily time frame, I saw price just creating this lower low right here, lower high. We broke this low, created a new lower low, lower high, and this was a double bottom formation. This is only a double bottom formation once the neckline of the double bottom breaks, right? Until then, this is still a potential move that can go to the downside. So I waited for price to break this high, and this confirmed a change of character because this high has been taken out, right? So looking at this was also a strong support level. If you can see from here, right, this was a support. So this was a strong support level. So what I was waiting for, mostly right after the break of the neckline of double top or double bottom, there is always a movement to the downside before price goes to the upside, right? Always after an impulse move, price usually makes a correction before continuing the move, right? Price doesn't just go up like that. There is always an impulse. Price pulls back before the continuation of the trend. So this was an impulsive move, and what I was waiting for was a pullback. Always when you are trading or before you make any decision, you need to identify the type of trend that we are on. If you are on an uptrend, you are looking for buying opportunities, right? But if you are buying, you don't want to buy when the price is high. You want to wait for the price to pull back before you buy, right? So you are buying at the end of the pullbacks. You don't want to buy at the higher highs. You want to buy at the higher low, like that. So this is where you are looking for buying opportunities. If price pushes to the upside, you want to wait for the pullback, identify the change of character before you go in here with the move to the upside. So that is exactly what we have right here. If you can see, price just pushed to the upside. I'm not looking for anything called buy. I'm just going to wait for price to pull back, before I identify when I can enter for a push to the upside. And usually when price makes an impulse, no one knows where the price is going to pull back to. We just have to anticipate, right? So when the price makes a high low, break this high, create a new high, I don't know how far this pullback will go before price will resume, right? Price could just pull back to this level and then push to the upside. We can even pull back here, push to the upside. We can even come back to this low before going to the upside. That is why we have this tool called the Fibonacci retracement, right? Price can just pull back to the 38.2 before going to the upside. We can pull back to the 50, 61, 78, or even 100% before price move to the upside. These are the types of pullbacks the price can make before continuing the trend. So looking at this structure, we had price just giving us a high, right? So my first anticipation was maybe price can just pull back to the previous resistance as support and then go to the upside. This is one. Price can also pull back here before going to the upside. This is two. Price can even come back here, right? That is using the fib. Price can come back here to the 100% zone before going to the upside. As long as this low is not broken, this is still a valid change of trend from bearish to bullish, as long as price has not broken this low. Price pulled back but to this low, right? Price never broke this low, so this was still a valid uptrend even though we had a push to the upside, as long as this low is not broken. If price broke this low, right, this would have been a continuation of this downtrend, which means this change of character was just a fake out or something like that, right? So this would have been a continuation to the downside. We will still be looking for selling opportunities, but until then we're still looking for buying opportunities. So if I go to the 4-hour time frame, I'm using the free version, so the replay tool is not going to work on the 4-hour time frame. So this is where we are right now here, right? So looking at this time frame, you can see price pulled back to this support zone, and if I should zoom in, you will see that we had an engulfing candlestick right here. This engulfing candlestick is telling us that buyers are coming back into the market. If you know the reason, or if you know the meaning of engulfing candlestick, this is telling us that buyers are coming right into this market, right? So this is just an indication that price is just failing to go to the downside, or price has a very low possibility of breaking this low, because we had this pin bar and also an engulfing, and this is a sign of reversal. So going forward as a day trader, I'm just interested in a move to the upside. What I would like to see is a trend, that is market creating higher low, higher low, higher high, right? I want to see two highs like that and also two lows, and this to me will confirm that this is a trend. So we'll go down on the lower time frame. Let's go to the 1-hour time frame, and we're gonna do this together. So right here, looking to my left, we have price creating high, low, and high, right? So I have my two highs right here. I also have my two lows. So once I see this is a confirmed trend, and I'll be looking forward to join this trend to the upside, because I have two highs and two lows. So now if I want to start looking for buying opportunities, as I said, I don't want to buy when price is high like that. I will wait for a pullback and then I will buy low. That is the principle, right? So we are buying low, we are selling high, and these are the areas that we want to be looking for buying opportunities. So if I should see something like that, high, low, I have my two highs, I have my two lows. The next high, when price pushes to the upside, I'm not looking for buying opportunity here. I will wait for price to pull back, and then I can take this buy to the upside. So now I have my first question answered. That is my what, right? I'm trading Euro USD. The second question is my when. When am I going to trade? And this has to do with my trading session. So we have 4 trading sessions. We have the London session, New York session, the Sydney session, and the Tokyo session. We're going to call that Sydney and Tokyo the Asian session. So we have the London, New York, and also the Asian session. Personally, I trade a London session, which means when I wake up, I'm just looking for trading opportunities during the London session. And once that is done, I'm out of the market. Sometimes I go beyond that. I trade a New York session sometimes as well. But once those sessions are over, I'm done with the market. I sleep and I wake up, come back to the same trading session. To show you the trading sessions, I'm going to use this indicator called the sessions and days of the week, right? So I'm just going to activate it right here. First of all, I'm just going to delete it so that I'll show you guys how to add this indicator. So we will come to indicators like that, and then we will search for sessions. Once we search for sessions, we're gonna get a lot of sessions. The one that I use is the first one, that is the sessions and days of the week by Nowtech, right? So you can see I have my favorite right here. So I'm just gonna click it, and that is gonna be on the chart. So all the colors that you can see right here, they are all the sessions that we have in the market. So we're gonna go to settings. We have the Frankfurt, London, New York, Sydney, Tokyo. So we're just gonna use the landing session. That is what I use. If you want to use any other one, you can actually use it, but I'm gonna show you this based on what I do. Okay, so I trade the landing session, so I'm just gonna untick all these ones, and then I will leave just the landing session, right? Then when I go to style, this is where you can actually change the colors. So the first one, this is 1, 2, 3, 4, 5, right? If you come here, this is 1, 2, 3, 4, 5. So we have the landing to be the second one. So the second color is going to be for landing. So I can change this color, I can make it green, whatever color that you prefer, you can just use it. And then if you look here, we have Monday, Tuesday, Wednesday, which is indicated at the bottom. This is telling us the day, right? This is Monday, this is Tuesday, this is Wednesday, like that. We're not going to use this as well, so we're just going to untick all these ones. Yes, so that is it. So we have the landing session indicated on the chart, which means when I wake up, this is the time period at which I will be looking for trading opportunities. So I'll go down on the 15 minutes time frame, and we will see right here, right? So you can see this is the landing session, this is the landing session, right? So in my time zone, the landing session starts at 11 a.m. right? So I'm only looking for trading opportunities during this landing session, that is 11 a.m. all the way to 8 p.m. in my time zone, right? So you can adjust that, you can see in your time zone as well. So this is the landing session. We also have the New York session, which opens at 5 p.m. in my time zone. So let's activate the New York session as well. We will come here, and then we will take this one. This is the New York, and as you can see, this is the New York session. So let me just delete everything. We have the landing opening right here and closing right here, right? So the New York also opens at 5 p.m., which means when the landing session opens, we have the New York also opening right in the middle of the landing session. And this is what we call the overlapping session, right? So we have the landing session in play, we have the New York also opening whilst the landing session is still running. So I can say I trade the landing and also the New York session because I hold trades sometimes even during the overlapping session and sometimes even during the New York session, right? So this is my trading session, but mainly looking for entries, I focus on the landing session. So for the sake of this video, I'm just going to use the landing session for this example. So let's just untick that. Let's just leave the landing session on the chart. So now I've selected my pair. I know my trading sessions. Let's look for entries. So as I said, we have the landing right here, followed by the New York, right? So this is the landing. We have the New York. Right after the New York, we have the Asian session. And after the Asian session, the landing opens again, right? So it's the landing, the New York, and the Asian session, landing, New York, and Asian session, like that, right? So since I'm trading the landing, which means I always wake up to the Asian session and also the New York session, right? This is where I really want you to pay attention. You see, when the market is moving to the upside, we have an impulsive movement followed by a correction and also an impulsive movement. Based on my own research and my backtesting, I've realized that the impulsive phases usually happens during the landing session because the landing session is the most volatile session in the market. So we can check that on Google. You see right here which Forex session is most volatile. So once I click that, you can see the landing session is the most volatile, right? Mostly we have these impulsive phases in the landing session. The Asian session is also the slowest session, right? So during the Asian session, that is where we see market just moving slowly, and then when the landing comes in, we see the market just going to the upside. That is why I personally like trading the landing session, because you can only make money in the market when there is volatility. So when the day starts, I'm always waking up to the Asian session, right? So this is where my strategy comes in. When I'm buying, I want to buy low. So this is where I'll be looking for buying opportunities, right? And you can see that during the Asian session, we have market moving very correctively. The landing session, we had market just pushing to the upside. So now it is my duty to identify when I can enter into the market, right? So looking at this structure based on how I trade, This is an impulse for me. This is a correction phase, right? So it's just my duty to apply my strategy to know when this market is going to continue going to the upside, because I've already identified this is an uptrend, but I need to get a reason to do so. So when I wake up, I'm waking up to this correction phase, and this is where I wait patiently for the market to break out. I get in here and then push to the upside, right? So let's just say I take this trade, the landing session is over, I'm done, I sleep, right? So here we have the New York session, the Asian session comes in. At this time, I'm not even close to my computer, right? So I'm off the charts, I sleep, I wake up to this structure, right? This is what happened during the Asian session. And as you can see, we have this market pushing to the upside. When I wake up, I just need to identify this structure and then get an entry. So I'm waking up to another pattern like that, right? This is the impulsive phase. We have the correction phase happening during the Asian session, because during the Asian session, the market is less volatile, right? That is why we have market just moving very slowly like that. So when I wake up, it's my duty to apply my strategy to get this trade to the upside. So as you can see, it's the same thing that happened here. I just have to get on the lower time frames, get an entry reason, and then ride this to the upside, right? So here I'll be done for the day, close my laptop, the New York session comes in, Asian session comes in, market moves slowly. I wake up to this again, right? So when I wake up, I just have to look at what happened during the Asian session, identify my structures, just mark out my levels, and see when I'll get into the market, right? So I just need an entry reason. Once I get it, I'm just riding it to the upside, right? As you can see, this actually shot to the upside during the New York session. That is why I said sometimes I hold my trade even up to maybe 10 p.m., right? That is if I'm in a trade and I realize that this trade has not really played out well, I can still hold it and see what will happen during the New York session, right? So I'll get in here and hold it and see. And as you can see, this actually shot to the upside. So here I'll be done, close my laptop. This is the Asian session, market just moves up, right? So I'm waking up to this at this level. I'm not looking for buying opportunities, because looking back at the Asian session, you can see the market didn't create a higher low, right? This was a higher high, higher low, market shot up, higher high, higher low. This is a higher high. And if I'm buying, this is not where I want to be looking for buying opportunities. So on this day, I'll not be looking for buying opportunities at this level. At the same time, I also don't want to sell, because I usually trade with a trend. So personally, during this time, I'll just allow market to do whatever it has to do, right? So this session, I'll not even take any trade. The market will just move how it needs to move. And as you can see, this is just a left shoulder head and right shoulder. This is just a pattern that will break to the downside. And this actually happened during the New York sessions. So let's just say we didn't take this trade because we are only looking at the landing session, right? This is the landing session. The New York session opens right here. That's whatever it has to do. And we wake up to this, right? Once I wake up, I already know that this trend is no longer an uptrend. We are now on a downtrend because we had the market changing structure, right? It's high, 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 low, high, high. Now we made a lower low. So when I wake up, I'm looking for selling opportunities. So I'm waking up to what happened during the Asian session, and this is where my pattern will come in, right? So I have an impulse. This is a correction. It's my duty now to catch this move to the downside because we are now on a downtrend, and what I'm looking for is selling opportunities. So at this level, I'll just get in right here, stop loss here, and then trade it to the downside. So you can see how I'm catching these moves during the trading session. I just don't come into the market any random time and start clicking buy or sell. I have a specific time that I come into the market, and when I come into the market, I'm looking back at what happened yesterday during the Asian session and then apply my strategy to see if I can get any entry for the day. That is how well I day trade, right? So if you want to day trade, you need to get a specific time frame that you come into the market or a specific session that you look for trading opportunities. So this is not a complete strategy, which means you cannot just use the sessions independently, right? You have to add it to your own trading style or your own trading strategy. So here, this is an impulsive move. I'm just waking up to this somewhere here. It doesn't mean when I wake up, automatically I'll be looking for selling opportunities because it's a downtrend. No, I'm still gonna do my top-down analysis, look at the higher time frames, see if there is any support level that will push the market to the upside. I need to make sure that I have all my confluences in place before I take the trade, right? But identifying your trading session and knowing when to trade is very important. So what do I mean by applying my strategy? Something like that. Of course, this is a downtrend, but I still have to do my top-down analysis. So I have to go on the higher time frame, that is daily time frame. This is where I start my analysis, right? This is where we are right now. But looking at the main structure, this is actually an uptrend. We have a higher high, high low. Market took out this high. This is a new high. So there is a high probability of the market coming here to retest, right? So we have the market just coming back to retest. So I'll go back to that time frame, my day trading time frame, and then look at this structure, right? So thinking that, okay, this is a downtrend, this is what happened during the Asian session. Maybe you might think this could be a flag pattern that will just break to the downside like that, right? But it failed to break to the downside. It just continued pushing to the upside because you failed to do your top-down analysis, right? So you can apply this session strategy, or you can add this tool to your trading arsenal, but you need to maintain your trading strategy. That is why before the video I said, regardless of how you trade, you can just add the sessions to your trading arsenal just to know when to take a trade. So with this trade, we have the market just pushing to the upside, right? So with day trading, we have the market just pushing to the upside, high, 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 low, high, 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 low, like that, right? So I'm just going to activate the trading session, and then let's look at this. We have the London session playing out here. This is the Asian, this is the New York session. Market shot up. This is the Asian session. So if I should day trade this one, let me just circle this, and then we'll go down on the 15 minutes time frame. So going back, let's just look at this structure. If I wake up, I'm just waking up to this. This is what happened during the Asian session. So I have the market just pushing up. There's a higher high, a higher low. I just have to identify my patterns right here, right? So this is what I'm just gonna do. Identify what happened during the Asian session, and then I'll get in with a confirmation. So this is gonna be my flag pattern, and then this is gonna be my entry reason, right? So I have a double bottom right here, breakout. I'm just gonna enter right here with a stop loss at the bottom, and then my take profit at the next, resistance, something like that, right? So back to the 1 hour time frame, we took this trade right here. We had market just moving up. There's the London, there's the New York session, Asian session. We create a new higher low, right? So higher high, higher low, same approach. We have our flag pattern, market just breaking up impulsively during the London session, right? Market shoots down, right? So this is the next day. This is what I'm gonna wake up to. So when I wake up, I still have to do my top-down analysis, as I said, right? So you can see this is a nice triangle pattern, right? This is a nice triangle pattern. We have support, support, support. We have the market just breaking out of this triangle pattern, and right here you can even scale in. So let's go down on the 15 minutes time frame right here. On the 15 minutes time frame, this is what we have. This is within the London session, right? So if you miss the entry right here, that is the breakout, you can still scale in. If I go on the 15 minutes time frame, you see the same pattern, right? You see this impulsive move, you see the market just pulling back, and then you can get it right here and then join the trend to the upside for the day, right? So this is where the London session will end for the day. Let's just say you took this trade, you targeted the next resistance. The next resistance is this level, right? So you get into the trade, you take your profit right here, you are done for the day. Let me just take this off so that it will be clear. Yes. So here you are done for the day. The New York session opens, it ends, the Asian session comes in. So you are waking up the next day to this, right? This is what you are waking up to. So personally, if I should wake up to this, what I'm gonna do, as I said, my analysis, I'm looking to my left, I have this resistance right here. Let me just clean everything just to keep the chart clean, right? So we have this resistance right here. Market got to the resistance, market pushed to the upside, came back to give us this low, tried again. This is a double top pattern, right after break of this low. So we took out this low. This is a confirmed double top pattern because the neckline is broken. So if I should activate my trading session, this break of the neckline actually happened during my trading session, right? So looking at this, I'll start looking for selling opportunities, of course, because we have a change of structure from an uptrend to a downtrend, and this actually happened during my trading session. So when I wake up to this, I'm just gonna see this candle breaking this low, and what I'll be looking for is a possible retest of the neckline, and then I'll look for selling opportunities. So let's go down on the 15 minutes time frame right here. This is what I'm gonna see, right? So we have the breakout, this is the retest, and then this is where we're gonna get in for an entry, right? So we have an entry right here, and then you can see that the market actually shot to the downside, right? So let's just say this is where you took your take profit for the day because we are just looking at the landing session, right? At the end of the day, you're still gonna be profitable, right? The Forex market is a 24-hour market, but identifying a time frame to trade actually keeps you disciplined because you know that this is the time frame that you're gonna be looking for trading opportunities. If you don't get any trading opportunity during that time frame, you're not gonna take any trade for the day, and this will even help you to avoid over trading. So if you don't get any opportunity that day, you close your chart, you come back the next day and look for another opportunity. So this is a lesson to take home. Always identify a trading session at which you'll be looking for trading opportunities. Guys, I hope you got something valuable from this small lesson. Don't forget to like, share, and subscribe. I'll see you guys in the next one. Take care.